persist without exception. Absolutely right. All right. Cool stuff. All right. So if you're brand new, there'll be a recording. It just won't be an IML TV. I'll make it available in the Scans, Forks, and Fibos group. So you need to be a member of the Scans, Forks, and Fibos group anyway, if you're going to follow me at all. All right. So welcome, everybody. My name is Steve Gregory. I'll be your host for the next 35 and 40 minutes. This is the Scans, Forks, and Fibos group. We're actually found in the harmonics section as well, or the harmonics tab as well. We teach the new paradigm of trading in here, the new paradigm. Oh, it's only going to be 35 or 40 because I don't have much to cover. Just introduce the whole and, those that were here last week, and then give a recommendation for money management, and we're good to go. Somebody, one of the admins, can you patrol the chat? People are over there. No sound, blah, blah, blah. Thanks, Zoe. Just for a few minutes at least. Yeah, it still thinks I'm Pacific. I moved to the East Coast, but I think my profile still says Pacific. So when I set it for 9:20, it automatically made it 12:20 Eastern. My apologies. A little razzled, guys. I'm sitting here trying to make the streamer work, and the server's not working at IML, and I'm trying all sorts of stuff. And, I know people get impatient really quick, so I'm trying to get that working and then fire up this at the same time. So a little patience. We'll get there. So I got a few people still coming over. Cool. All right, so I'm Steve Gregory. I've been trading about 15 years now, just over actually, and coaching just shy of that, just over 14 in various capacities, but the last 12 years really strong and heavy. I'm a very technical trader. I'm a very math-oriented trader. Do the math. That's how you find out how you really make money in the Forex. I find it kind of funny. I was talking to one of the swipe traders today, and I said, I kind of find it funny how people just come in and go anywhere and don't know what they're trading, how it really works. I'm not talking about the mechanics of the model. I'm talking about how you make money. And it's a little bit like going on an interview, getting accepted for the job, and you go the first day to report to the job, and they give you your duties, and you're doing all that you do, and you don't even know what your salary is. And so a trader right off the bat needs to know how you make money in the Forex. So I have videos for that, by the way. And you can go to, if you're new to me or my group, you can go to scansforksfibos.com. And there's a video there which will tell you a little bit about what I do, what we do in the new paradigm. It's about 45 minutes long. There's several videos that I direct you to about risk, how risk really works. Okay. Why you might want to use pitchforks. So we take advantage of pitchforks in here, and I see other educators starting to use them now too. Chance is using them now. And, he'd be one of my students, and he's a really good trader, and he's just incorporating the new paradigm into his trading and killing it. Absolutely killing it. So kind of fun to see. So anyway, there's a video there, and that'll help you understand. I kind of click back. That'll help you understand what we're about, what the new paradigm is about. And here's the thing to get you excited if you don't know what the new paradigm is. We're going to make 3 to 5 times more profit per trade than most other traders in the same trades, starting with the same account and same downside risk. The other thing is we're big on harmonics. So we're going to use the harmonic scanner, which you get free with your platinum membership. Well, I won't say free. It's included as part of your platinum membership. You pay for it. And we're going to show you how to make more profit in that than you can anywhere else. And also how to get 2 to 5 extra trades out of that scanner. Okay. And that's all good stuff. That's all good stuff. So tonight is kind of a follow-up session to last week, so I'll spend just 5 or 10 minutes kind of reviewing last week and then moving on. I will tell you that I use the Hull for money management, and it's a great way to trade. So again, the skinny on the Hull moving average has a near zero lag. It's a very sophisticated formula. It's not like any of the other moving averages. It came in the market out of competition for something that was originally called the JMA, which is the Jurek or Jurac or Jarek or Jarvac moving average, which is similar attributes, very little lag, a near zero lag. You can set it that way. Faster and more accurate than all other averages, but allows the whipsaw. And so the thing is, they were selling that for about $3,300 to $3,800 a pop, depending on what system you were on. And so Alan Hall out of Australia said, "Pah!" And he figured out a formula that gives a near kissing cousin to that particular high-end commercial moving average. And so I've been using it for many years. Had an opportunity to talk with Alan Hall one time. Told him what we were doing, talked a little bit about our time frames and the types of things, and showed him our harmonics. And he came back and said, this is where you want your setting. And so that's what I've used for years, okay? So let's wait for questions till the end, if you don't mind, guys, because I want to make sure I'm not getting distracted. But no problem. I want to answer them. So it's a pretty reliable beast. And so we've been using it for years. We were one of the first people to put colors in it for the trend color. Oh my gosh, probably 7 to 10 years ago we had that. And at that time, FX Trek, which were the producers of IntelliCharts, didn't have a Hall. And so we coded it up for them and got it in their charts. And then we've been using the color coding ever since. And of course, almost everybody else has adopted a trend color for it as well. We've continued to pioneer the use of it because of what it does. Here's why having something like the Hall as an exit is really worthwhile. It doesn't matter what system you're trading. It doesn't care what level of trader you are, okay? It can be traded robotically, and I don't mean it's a bot or it's an EA, but when I say that, I mean instead of manual decisions, instead of manual checks, you can actually put the Hall on your chart and let it tell you with an alert when you should exit the trade. Or as you'll learn tonight, as an alternative, when you may want to leg down in the trade and continue on in the trade. So there's probably 1,001 ways to use it, and we came up with a couple of neat implementations for it that make it pretty strong. So the first thing that we did in some of our recent upgrades, hold on, let me get this. All right. Go down to my well, there we are. That's what I wanted. So I want you to look at scale. No, Lordy, where's my pen? This is just one of those nights. Hang with me a second. Hmm. All right, should be able to call it up now. Likes to do that to me now and then. There she is. So one of the nice things about the new paradigm, so if you'll look here, the scale for your grid here, I know it's faint, might not come through. 7320, 7340, so 20 pip scale here. And you can see when you put 2% into a 10 pip stop loss, we use 10 pip stop losses for our calculation, although we rarely go out at 10 pips for our stop loss. What that also means is on the positive side, when you're gaining, every 10 pips, you're making 2%, which is pretty cool. So when you have a trade here that goes essentially just shy of 7140 and comes up in here or in here, and let's just use that tag for now. Okay, and gets up to 7180, 40 pips. And that equals 8%. So you don't need to have these Mongo trades. You need Mongo trades yeah, you need to change the resolution on your monitor if you can't see what I'm doing. Yeah. Some of you being kind of funny, so I'll kill that. All right. Oh man, when it's tech crazy, it's crazy. So you don't need to catch these Mongo pips, in order to make trades. And you only need a couple trades like this a week, to literally give you 50% return a month, which is really cool. Pretty easy. Pretty easy. Okay. Anyway, all risks aside, anytime I talk about money, anytime I talk about income, you have to understand there's disclaimers that go with it, and you can find those at www.tradingdisclaimers.com, www.tradingdisclaimers.com. So the real part that I want to get to here is let's talk about like this potential trade, and we'll jump to a 1-minute chart to look at that. Yeah, we do most of our trading off 1-minute charts. So now we're down a little bit more in our comfort land with 5 pip channels on our 1-minute chart. That's generally what we're looking for. It's what we like to set it at. All right. Yeah, if you make 8% on one day on a tiny 20 pip move, I don't want to talk big numbers, but five pip channels. Okay. So you see 2 plots on here. And so that is our haul, our multiple time frame haul which is a great innovation. And it's a great innovation because you can put two different halls on the same chart. And the cool part, because our whole emphasis, my whole emphasis is multiple time frame analysis, it allows you to manage trades without having to be all over your charts, just be on one chart, which is really cool. Okay, so here's how that works. This is the control panel for our multiple time frame haul. And look, you know, if you're going to jump out of here and go to the indicators and try and download it, go ahead, you'll be getting the old version. So if you think you're being real coy and you're going to jump off, just, you know, you're not being so coy and you're going to get something that's stale. So 21 is our default bar count setting for the haul per conversation and whatnot with Alan Hall. Now, we do have the ability to put two different hauls on this chart, and we can put them in two different forms. The first form is, as you see, a line. So that's going to plot what you typically see as your moving average. The moving average plot. Okay. Yeah. Hello. There we go. It took a second for it to figure itself out. So what you see on the chart here now, as I've set it up, if we go back to our panel, is for the first haul, the parameter's 21, set it up as a line, and we set it up as local. Local means whatever time period you're on. So if it says local and I'm on a 1 minute chart, it's going to plot the 1 minute haul. If I have this open on a 5 minute chart, local means the 5 minute haul. So local means whatever time period you're on. So if I have it local here, it's going to plot a line, which is the moving average, for the 1 minute haul. Which is what I want here, because I'm on a 1 minute chart and I want to see what it does. 1 minute is going to, where the haul shines is where you have stretches that go beyond. One more time. This is a brand new version. It has extra features in it. So yes, it is different than the one I even had Monday. I will upload it later. So where the haul shines is where at time period it stretches out. All right, it really stretches out. Then you just throw yourself at the haul. So if I'm a 1 minute trader, a 1 minute scalper burst trader, you know, you can't use the haul. You'll get killed. All right, it's like anything else. The haul senses the reversal. It gives you the reversal after the reversal, but in terms of getting you out, it gets you out pretty fast. The average erosion on a haul reversal is only 23%. You're not going to find that with any other system. And the nice thing is you don't have to sit here and be stressing and worrying, because the haul average is 23%, which means if you use it all the time, you're going to get 23%. Yes, sometimes it's going to be 38% erosion before the haul will flip. Sometimes it's 17%. It averages 23 on all time periods because it's a fractal, it's scaled. So 23% erosion before it takes you out is damn tight. Okay? So that's why I like using it. And it allows me to go from trade 1 to trade 2 to trade 3 to trade 4 to trade 5, doing the same thing every trade. If price is going to stretch out, it stretches out. Now the haul becomes my de facto. It becomes top dog. It becomes the tool that I use for my exits. It overrules indicators. It overrules support and resistance zones. If you try to manually trade against the Hall, you are not going to average 23%. So the first thing you have to do if you're going to trade the Hall is absolutely be willing to not have an ego, to not be competitive against something that is designed and has proven itself over year after year after year after year as a very, very solid money management tool for an exit. All right. So we generally have a rule with a lot of my trading, and that is this. My Tab 29 traders know we have some stuff that helps us exit trades, and we use that as our first source of exit, and then we always have the or. Or if we have 40% erosion from the start of our move, before whatever is up here occurs, we take the 40% erosion. So it's a if this, exit. If not, then use this to exit. So we're going to do the same thing here. So we're going to have a Hall flip. Our 40%, whichever occurs first. That's just the best way to trade it. Okay. Wow, one more time. Wait for questions until the end, please. I'll answer all the questions at the end. Right now, it just busies up my chat box, and I'm watching 2 of them. So let's talk about this trade, because actually I did post it. I did post the money management on this earlier. So what you would do, what I do, is first of all, you have to size up what the trade is. I mean, what are you trading, and what is really going on with the charts? So I have a harmonic scan that by all intents and purposes has failed. You know, it's driven past the D. Would have been some pips here. Got your 15%. In this particular case, we're using an X-ray alpha with the tag at the C. So we have, don't even have my Charlie Delta on here because I just don't want to mess up the training. So I have an X-ray alpha. With X-ray alpha, we either put the upper parallel on the C or we put the lower parallel on the D. So in this one, I elected to put the upper parallel to the C. And there was, you know, a kind of nice touch or two. We want it to be Fibonacci, median, outer parallels to really get a good sense for the fork. And then you use whatever else you have. If you're trading just forks, you'd like an energy point, be it a Fibonacci, be it a support and resistance from INS. If you don't know what INS is, I gave that one away several months back. It's a bundled support and resistance indicator that has Camarilla lines, Fibo pivot lines, some custom systems, some stuff from some institutional traders, all sorts of various support and resistance systems in my harmonic targets that you can roll through and see if any of them are being compliant today with price. So you'd want something else. You know, it just depends on what you're trading. I teach pitchforks right now, so I'm going to shrink down this other indicator that I have here so it doesn't clog the picture. Or better yet, I'll just take it off. So you want to get the big picture. Well, look at this. I've got a pitchfork, and if you follow me on pitchforks, you know that from a bottom bounce, there's a high probability of getting to this median line. If it's a traditional fork like our Charlie Delta, if this was a Charlie Delta drawn in here, there'd be an 80% chance of getting there. That's why we like using pitchforks on top of scans. There's just a good Please tell him the recording won't be on IML, and if he doesn't want to join us here, I'm sorry, he probably won't see it. I don't know what to say. Okay, so you want to size up your opportunity. If I'm going to enter a trade, see the scan's already been here. It's not like I was trying to trade the D. The scan was here, and I didn't look at it until afterwards, until after this initial move. Okay, but I can still use the scan. This is why we get extra trades out of it. When everybody gets their profit here and either took profit and quit, or came back and got stopped out in profit, or whenever they exited, that scan's done. Right? So we get an extra trade out of this bad boy, at least one. So you have to size up the opportunity. You can't just, enter a trade and say, what am I doing? Most of our scans are on 15-minute charts. I like moving mine to the 15, sometimes the 30, just depends on the size of the scan. All right. That CD leg was 196 pips. See, guys, that's not a 15-minute wave. That's not it's drawn on a 15-minute chart, but that's nowhere close to what a 15-minute wave would look like in size. That's almost qualifying for 4-hour. So 30 minutes is surely going to be okay to put it on that chart. All right. Whoops. So you have to size up what it is. So there's lots of potential here. I mean, if the CD leg is 196 pips, then it's almost 100 pips to the median. Right? Start almost 100 pips to the median. So you have pretty good trading, which means if I got a 100 pip opportunity here, it doesn't mean it's an opportunity. There's going to be a lot of head games you got to go through to exercise that. I mean, you just don't enter here and set a stop loss and say, I hope I get there. And you don't just randomly move your stop loss up, because in the natural way to get there, it's going to zigzag. So you learn not to be greedy. And you learn because in the new paradigm, you can trade really tight. Tight stops. Tight stops mean more profit per dollar or more profit per pip than anybody else makes. That's what the new paradigm is all about. Low risk, high yield. The lowest risk in the market with the highest yield in the market. So I'm going to size this up. So if it's 100 pips to there, it's darn near 50 here. I could look at the moves. I want to size up the moves. Well, I got one move from the bottom up. I got another move from the bottom up. I got another move from the bottom up. Hey, this thing may not make it the 100 pips, but it's not having any trouble giving me 50. So what I would like to do when I see this is I want to get those 50 pips, and if it keeps on running, I want to participate. In other words, I'm not going to get squeamish and just exit because I've got my 50 pips, because I know 100 is going to be hard to get. So I want to maximize this opportunity. So this is where the Hall comes in. Can come in if you elect to use it. Let's go back to our 1 minute. Talk a little bit more about the features of the Hall now. All right, so we've got our 1 minute Hall on here. You can't possibly use the Hall at all until it's in the direction of your trade. If I'm doing a reversal down here, okay, the Hall's not going to flip. This Hall doesn't flip green until right about up here. So there's no use of it until, first of all, it actually turns in the direction of your trade. Oh yeah, I had solid reason to take that trade. I had other confirmations, if you're asking that. All right, so you'll blow it up when you're there. You wouldn't trade, you know, of course the right side of your screen wouldn't be there. Okay. So you're not gonna trade at that level on a 1 minute chart. You would be much more zoomed in. Oh. Yeah. Hello. Come back. Now let me put the zoom on it. You'd probably be about like that in real time, waiting for that trade. Seeing the bounce on the 30. Okay. Now you can see here, some of you going, but it didn't tag the line. These are down to 2 pip channels. So we're probably about a pip and a half shy of the pitchfork, which based on scale, if I have a big long candle, look at this, candle 1, candle 2 grows even more, candle 3 grows even more, and it starts pulling away, and I'm within 2 pips, I'm taking that trade. Okay. So hopefully, Cassandra, you see it's not too light. You can see it. And if you have a hard time seeing it, you have the option. What did I just do? What happened? What did I do to lose everything? Yeah, I have the option to make it all go away. And Trading Cat's shaming me here. I don't know what I did. Anybody know what? Oh, I'm in drawing tools or something? Did I? Yeah, but I didn't do that to the price field. Oh, there it is. Thank you. You're right. My bad. Now I see. I don't know what I did. Yeah, I know magnet mode is on. Gosh darn it. All right, so let me try that one time again. Oh, lordy, lordy. So there I am. That's what I wanted to do. Ow, Kelly. You can always make, you know, your moving average thicker and bigger. Kelly, not right now. So there you go. So a strategy, because of what I just said about the potential move, is this. And just cut to the chase with this, because I'm letting all the technical stuff get to me tonight. Got to remember, we said it was a 15-minute scan, but it was really much more than that. And so here's my lower parallel. Here's my quad line. So that's the first major line up in the fork. It's 1/4 of the fork. This is my 1/8 line. I saw all those others move, I saw all those other moves multiple times get past that quad line. So in my head, that becomes a place I want to go. I think it has potential to get there. I'm not saying it is. There's no forecast in this. I'm just seeing what the potential is. So here's what you do. On your 1-minute chart, after the hall has cleared, in other words, after this candle here is closed and this hall is actually turned green, okay? Don't get confused by center lines. That candle there, that doji, did not turn it green. The doji's middle line is right there, so technically it's still red. It's the next candle that turns it green. So you want to understand that, okay? Yeah, the drawing button was highlighted. I got it. So the first thing I'm going to do is, on my 1-minute chart, have a local hall. There's no need for price to come more than 5 pips outside that fork. I put 2% into a 10 pip stop loss. We'll never use it. It's called our emergency stop loss. I take myself out manually at 5 pips, which means 10%. Lordy. 10 pips. I take myself out manually at 5, which means when I lose my trade, I'm only losing 1%. Well, why'd you put 2% into a 10 pip stop loss? Because I want to make 2% every 10 pips, and I don't want to be any more aggressive than that. So it's never going to come out this far. I'll be happy right here, and I'll lose 1%. I won't lose 2% that I have in the trade. All right, so let's get past the stop loss stuff for now. I'm going to ride my 1-minute haul with the same philosophy we talked about earlier. It's going to be the hall flip, or 40% of my move, whichever comes first. Now, how hard is that as a money management system? 40% merely means as price is moving upward, I have a Fibbo on here and I'm tracking where 40% is. If price goes higher, well, that number attached to my Fibbo goes higher. So all I have to do is grab my cursor, keep moving up. I never pull it back down. I want to stay with the highest point of the move. So no brains involved here. I wait for the hall flip. No, I would place 10 pips in the trading station and draw a 5 pip line on the chart. When price hits my 5 pip line, I exit the trade manually. 10 is there as an emergency. I don't move it to 5 anytime. Fibbo set from the very bottom of the move. Not where you entered it. So if you're one of these guys that likes to hesitate and hesitate and hesitate, you didn't enter the trade until it was 10 pips into the move, well, you'll probably be screwed. That's why we don't hesitate. Can't. You either trade it or you don't. Or you don't get in trades late. Not off pitchfork bounces. All right. So 1 minute local haul. That's pretty easy to do. Or 40% of the move. So you trade this mechanically. I don't have any, and the reason you do is because you can trust the haul. So once the haul's cleared itself, and you'll notice, on a 1 minute chart, that could be 10, 15 pips, just depends. So once the hall's cleared, and turned in your direction, you can now use it for exit. The top of the Fibbo is the highest point you're at as the trade's moving forward. Never retreat, you only move it up. Make sense? So that's it. Now, on a trade like this, where I'm trying to get up here, I would probably look to at least 4, maybe 5 legs for my trade. A leg merely means a point in time where I'm going to take some profit out, like a take profit point. And I want to do that because I understand how price is going to work. I understand how it's going to work against my head. And I want to do something as mechanically as I can. So if I use the same logic all the way. So what I'm going to do, write smaller, 1 minute haul, flip, or 40%, whichever comes first. It's easy. 2 options there. Is there a third option there? You have 2 options for the 1 minute haul, the first exit. 1 minute haul flip or 40%. So what you're going to do now, when the haul flips and goes red on you, and this is a little bit of an interesting exercise. What you're going to do is you'll be exiting the trade in here. So I'm going to take out 20 or 25% of my lots. And I'm then going to go to my 5 minute haul. Depending on the kind of move you have and where you exited, you want to see price go up, but I'm still going to keep my 40% of the move because that's going to be my protection. So I'm moving to the 5 minute haul or 40%, whichever comes first, until I clear some barriers. Once again, very mechanical. You're saying, oh, it flipped out here. I've still got my 40% line on the chart. It's pretty simple. I measured it earlier, and it really is kind of in that area. So when I switch here, my 40% line hasn't changed because that's still been my highest point. That 40% line doesn't creep up a little until you get to this high here and then this high here. And it'll start moving its way up slowly. Okay. So what happens then is you say 5 minute or 40%, whichever comes first. All right. There's the bottom of my move. So what you do with your stop loss is wherever you are in time, that's where the top of your Fibbo is. So when I was right there, there's the top of my Fibbo. When I got up here, there's the top of my Fibbo. When I get up here, there's the top of my Fibbo. When I get up here, there's the top of my Fibbo. It's just the dynamic. Wherever you have a high and then you start having a pullback against that high represents the most recent place you have your Fibbo. It's like a trailing stop. It's just a percentage trailing stop. No big deal. Piece of cake. So what's going to happen here, remember I took out 25% there. I can take out 25% here. If the Fibbo, excuse me, the 40% is reached or the 5-minute haul flips. I could jump to my 10 or 15 based on your preferences, doesn't matter, essentially, or 40%. All you're doing is walking the haul forward because as you go up in time frame, in the totality of the bottom of that move, the percentages remain the same. It's just in absolute value, they're going to be deeper numbers. So you allow the haul to grow itself, essentially. Let's look at that here with what we have as an advantage on the haul. So let's move this over a little. This will make more sense. So now we're going to put a second haul on here. We have our 1 minute. So now we're going to put the 5-minute on here. So we're going to use the second haul that we could put on the chart. It's also, yikes. It's also going to be 22. Also going to be 21 in length. All right. And now I'm going to put, instead of a line, I'm going to use bands, and I'm going to use, let's say, 10-minute. So now what you see is where that occurs. So I exited 25% when the 1-minute haul flipped. You'll notice there are plenty of 1-minute haul flips thereafter. I'm not interested in them. Here's the flip I'm interested in. The bands represent my 10-minute haul, and I've plotted as a band rather than an average. So this is the point of demarcation where essentially my 5-minute has said, you're good to go here. I can actually trust you now. That's how long it took for the 5-minute to change direction. Nope, the 40% floats. Let's see if I can pull up that picture I had this morning. I posted it. So now if I didn't get my 40% in here to take me out, I'm just waiting for my haul to turn green at the 5-minute or the 10-minute level. Once it turns green at the 10-minute level, I'm now on that green. Period, end of story. Trailing a 40% stop loss of that entirety of the move. If this is my point here, well, 40%. If it gets up to here, well, 40%, wherever it would be. Now you can use logical things, when you transition further into the trade to set your stop loss, and sometimes it'll be greater than 40%, which is what I demonstrated today. So here's a point where the 5-minute haul the 10-minute haul just didn't go that far. You know, it said enter here, not enter, but this is where the momentum had been far enough up, and here's the exit. So it didn't go anywhere, but guess what? My 40% line's down here. So I can say, oh, okay, now we'll go to my 30-minute haul. Still riding it. All right. So give me 1 second here. If I could pull out the actual details on this so it makes a little bit more sense. But that's in theory how you do it. Yeah. And I'm trying to find a file. Give me a sec. Yeah, can't even remember that. I should have remembered what it was called. Hang in there. We're almost there. Directory. All right. Sorry about that. So here you can see some progression. Why does that? All right. So there's 25% exited down here, and I let that remain the stop, right? First, and the reason is simple, okay? The 40%, because I hadn't switched, the high is still going to be, at that point, the high, when this came all the way down here, was at 40%. What? No, it's not letting me draw. There we go. So there's my new stop. And what I'm going to do is allow this to come back to those previous lows. I'm just covering some lows in there. Makes sense. Price moves on. Price moves on. You can move it to 40% when you're in this range because you've gone far enough. You don't have to worry about this coming back. If it comes back that far, I just don't want to erode that much. I don't mind getting taken out up here because I'll already be in steep profit. Who cares with the last 75%? They're going to go out at more profit than I went out down here. So 40% is fine, move it at that point. However, as we're moving up here, what happens here is I hit that quad, which we've seen it get to 3 or 4 times. And so at that exit, okay, here's my stop. I still want to cover these lots. You say, well, that's a big gap in your stop. Well, look, I got to that point. We're cool. And what I'm looking for is the next time it goes above that quad, here's my stop loss. And the reason is I'm just going to cover this low here. So I can actually get it tighter than 40%. You just want to use common sense. So does the momentum follow the normal flow of time periods? I don't understand that. There's no prescription for momentum. It could go any way. So you got more things than you need to see here about what's going on. All right. I mean, we have a pitchfork. We've seen it get up to this line three times. So that's a good place to have expectations, not expectations. That's a good place I want to set my money management. Says I'll allow it to get there. I don't want to take myself out down here just because it's pulling back against me. I want to let it run. Let your profits run. And so the haul is just a great way of doing that. So you can flip, in this case, I think what I ended up doing, as you can see here, I went immediately to the 30 because I wanted to get up here. I didn't want some 23% retrace of a 5-minute size wave taking me out. I felt comfortable to go for that. I still protected. All my lots are going to go out and profit. Doesn't matter at that point. You just be logical. You don't want to have a 40% stop where price goes 3 pips past it to challenge a previous low. That just doesn't make much sense. So you just flow. You just flow with when one haul ends and flips to the negative down here, you move to the next reasonable time period. If this is a 1-minute chart, I'm looking at a 30, 60-minute move. I can move to the 10. I can move to the 30. It's going to be fine. The only point I'm trying to make here is you had those 2 pieces of information here right on the charts. I don't have to look at my 30-minute chart. I'm not worried about whipsaw or whatever in here. I'm not worried about whipsaw in here. Right here, boom, I'm safe to be. This is what I was trying to draw. This is the start of my 30-minute flip. That's why it took so long to get up there. There's that's the start of the 30-minute haul now in my favor. I just ride that up until it gets, now again, stop loss. I'm going to keep this low. So we get up here. Once we clear this up here, I move my stop loss up. That's as far as low as I want to get. But now geez, look at what the profit we're in. We had 40, 45 pips up here. So I'm comfortable. Take out another 25%. And you'll see I banked my odds on the legging down. I said I wanted to get up to that quad with maybe 4 legs. We took one out here for 25%. I'm now on the 30-minute haul, still on it at this time, but I got to the quad, 50% out. If the 30-minute haul continues to go up, that last 25% is good. And if the 30-minute haul pulls back and goes red, it hasn't crossed the 40% at that point, which I would be using at that point, then guess what? You go to a 60-minute. Now, changes from last week. So anyway, the bottom line is you've got a haul. You can be very creative in how you use it between lines and bands. Now here's the cool thing. I set my stop loss. Let's just pretend this is a new trade. Okay. So I got up here, I'm in my 30-minute chart. At that point, price has gone up enough, my stop loss gets to advance. There's the higher point right there. So I got my stop loss on the chart until price goes higher, right? So that would, here's my trading station stop loss. But I want to go and do something. Obviously, if we're going to take ourselves out, we're going to take ourselves out there. If we get higher up, and this is where the Hall flips to red for the 30-minute chart, obviously it would have already, price would have done something like this. It would have gone up and is coming down. Okay. So we can now get an alert for that flip right there, which would tell us exit the trade or exit those lots, right? We can get an alert for that. And we built that alert mechanism, the way you can affect it and talk to TradingView is we have our indicator talking to TradingView through an API for their alert mechanism. Yeah, you could do standard alerts in TradingView. Put a moving average on, hey, when this moving average hits this, crosses this or crosses that, or, oh, here's a channel when price hits that channel, etc. Right? But a Hall flip is a different beast. So you can't just go on the chart because the Hall's here and do an alert. You actually have to build a communications vehicle to how TradingView looks at alerts and put it in your app or your indicator. And so we did this, very clever. And so what we would want to do here is the first thing I want to point out in changes that we made from last week is we went ahead and just made it a full board, all the way utility, regardless of time frame. So you'll now notice in your time frame selections, you go past 30 minutes and 60 minutes. I don't know why these are reversed. It's kind of funny. But so now we can go 15, 30, 60, 4 hour, 8 hour daily. Okay, for your Hall, which is pretty cool. But the mechanism and again, we're enhancing this. The APIs are challenging enough, but when you put two Halls on the same chart, it gets a little bit more complicated. So we're working on that. So you'll see pieces of that in what I'm going to show you, because this is, we're going to go through one more iteration here. The way we're going to work this is whatever you have as your first Hall is what you'll get notice on. So what I would want to do then for my alert here, once I transition to the 30-minute chart, is go ahead and make my first one the 30-minute Hall. And, I can make the second one, 1 hour. Give it a chance to cook. So now, we're getting, you see the 30-minute Hall, and now we finally have the, excuse me, let's go back here. So here's the 30-minute Hall flipping from green to red, right? So that's what you'd want notice on. So the way you do it, once you have that first MA set to the time frame you want, is you can go do your traditional alert mechanism. Now watch this. Instead of, the currency pair doing something, there's actually Hall shows up. multi-time frame analysis, Hall with bands. Boom. It automatically defaults to 1. You'll see a 2 there, but it's not active yet. So Hall 1, Hall flip. There you have it. So now you know exactly when the 30-minute Hall will flip right here on a candle close. On a candle close. And you'll see it whatever time period chart you're on, which is pretty cool. This looks pretty, innocent in here, and yet that candle there marks the full pullback of the 30-minute Hall. If you were to watch this on a 30-minute Hall, you'd see the pullback look right there. The only thing I'll warn you, and this is typical of all TradingView alerts, is, I would say Hall flip 30-minute AUD USD. Because otherwise, all you're going to get is a Hall flip alert, and if you have 3 or 4 of them out there, you're not going to know which chart it's coming from. So there you have it. You can put alerts on Hall flips at any level. At any level. Quite frankly, I wouldn't put it on my 1-minute chart. I mean, just don't. If I'm setting a 30-minute Hall alert, I'm going to put it on my 30-minute chart just for practicality. So pretty cool. The Hall does its thing really well. So 1-minute chart, and we set it with a 1-minute Hall and 5-minute bands? 30 minutes. No, 5-minute Hall and 30-minute bands on my 1-minute chart. Pretty cool. Pretty cool. So, and you'll see times, look at this as a case in point. Now, I know it doesn't always work like this, but just showing you. Notice this pullback because of the scale. Let's just talk about that first, wrap this up. Notice that even the 5-minute Hall was not afraid of this pullback. Wasn't enough based on the formula for the Hall to say, take me out of the trade. Now remember, it's cumulative, so all these candles down here below these highs eventually add up. And what interestingly enough, the thing that turns this Hall red is a blue candle, which you would never exit on a blue candle. You'd wait for the next candle, and it has to be closed. You'd wait for the next candle to go red. So there's your exit on the 5-minute Hall. And what I was starting to do was, if you measure from the bottom where it was turning itself to the high, well, you can see where 40% is. So it beat 40%. Oh, it's not a setting. So here's 23, and here's 38 too. 15, so it's around 30 it took you out there. Not bad. Yep. Forks and scans for entries, Halls for the exits. It's mindless trading. I've seen so much stuff with scans, my head spins. And, I mean, you select your own trader path, okay? But, in my head, a new trader who wants to play with the scanner can literally go through our Charlie Delta course, having not even gone through the Pitchfork course, just go through Charlie Delta and snap 3 snaps, you know, they're already labeled for you on the chart, CDX, and can start trading that Pitchfork. There's no, you have to know Elliott Wave inside out, market structure. I mean, that's advanced trader stuff. Because market structure, it shows up at different time periods on the same time period chart. I could be on a 30-minute chart and see market structure, and if I don't know Elliott Wave, I don't know whether that's at the 30-minute level, the 1-hour level, or the 10-minute level. You really can't. You have to be a damn good Elliottian. I didn't get out at 30. What I'm showing you is, I got out at 30 because my Hall flipped. This is the candle that closed that flipped the Hall. So let me review. This candle, the Hall flipped on this blue candle, but I'm not going to exit a buy on a blue candle close. Just not. So you have to wait for the next red candle to close. Yeah, you're not exiting at 30 pips down or 30% down. You're just exiting on the candle that closes and the Hall turns red, unless in this case it's a blue candle and you wait for the red candle. I was just showing you where it falls in terms of percentages on the chart, and that's why you can trust it, because it gives you these really good exits. And you could just walk through a chart with Fibbo, chart after chart after chart, and see that stuff, time after time after time. Here's another one coming the other way, turns red, turns green here, pretty much on that candle close. There was already enough downward momentum that even though it went up here, it's coming down, it starts coming back down. All these candles were up in the, because you're talking about there, that's the 5-minute Hall on my 1-minute chart. So if I was in the trade here, I would measure from here to my exit point here to see what kind of erosion the Hall gave me to get out of that trade. $23 points, well, again, a little higher than 23, so it's about 25, 20, again, very tight. Very tight. All right, so it's mindless, and that means what? No emotion. You're not making decisions. The Hall's making the decisions for you, which is what you want. You don't want to have to sit there and do analysis to exit a trade. You don't want to have to figure out market structure. If I'm looking at market structure, really what time period is that market structure? Because Elliott Wave, while it has a close resemblance to time periods and there's interval levels assigned to time periods, they're pretty loose. So you might have a particular structure on one time period that's not relevant for that time period. Could be smaller, could be bigger. And not only that, learning that structure, when you get away from the theory of how it looks and you get down to seeing it on live candles, it's really hard. It's really hard. And now you're tracking market structure against support and resistance points. It gets complicated pretty fast. One point I want to make here again, once I've committed to the Hall, because it has more brains than I do. See, ego submission. It has more brains than I do. It's not going to have an RAS that gets impacted by what's going on, my previous trading, what other people have told me, what the cat peed on the sofa, blah, 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 blah. It doesn't have an RAS. It has the same mechanical RAS every time. It's a great, great tool. It's a great tool. And you become robotic. No emotion. None of that sit down in the chart, oh, last time I did that where I used the market structure and I thought it was the 3-wave and it was really the 5, and oh my gosh, that 4-hour support and resistance just didn't have anything and went through it like, you know, a hot knife through butter. Next time I'm going to change it up. This is how you learn how to make money. Tight, tight, tight. Get in, make your pips, get out non-emotionally, and you're good to go. I was just throwing that out there. My cat doesn't do that. Trading Cat's very good. So, fun stuff, you know. It's absolutely fun stuff. And you get better at it. It's like everything else. I'll load it up tomorrow, the latest one. I won't do a training on the next one. I'll just say the new one has been released that has the 2 version. If we can get it, we might not get it. If it has the 2 version where you can put alerts on 2 different HMAs, be it bands or be it. Yeah. But for now, at least you can pick one and do that. You could always rechange the alert for the next level. As you go to the next level, okay, fine. Change my alert. Oh my gosh, that's so much work. All right, I really don't have anything else to say. Sorry, I was a little discombobulated and I'm still not well. My head's still congested and it's not operating at 100% capacity. And then the server not working over at IML, I'm not sure there. Any other questions on the whole? I said I'd hold questions. I tried to start answering them as we were getting in there. No problem, no problem. We'll be going over this in the group too. So hey, look, for guys here that aren't part of our group, get in our group. Scan Forex, Scans, Forks, and Fibos. Get in that group. The hall will be on when you open your TradingView charts, go up to indicator and go to public and just type MFTA or MTFA, multiple time frame analysis, and it'll show it to you. Just as it says, multiple time frame HMA with bands. But wait until I say tomorrow morning, I'll put an announcement in the group that it's available. So it's easy just to jump one time frame momentum, if you want to call it, measure to another. I really wouldn't call the whole moving average a momentum indicator. It's just scaled fractally, you know, unlike other EMAs. Unlike other moving averages, not just EMAs. So it's pretty cool in terms of that, and you can use it anywhere. And I'll just, I'll conclude with this. I've said it many times. When you make yourself a trader, see up front, you're kind of lured into this. You're kind of lulled into this. You're kind of coerced into becoming a trader. And as you get closer and closer to becoming that trader, your ego gets bigger and bigger and bigger. It's a prideful moment, and so you want to be, I want to be the trader. Trouble is, along with the title comes responsibility and liability. You're liable for your victories and your losses. And the challenge when you make yourself the trader, it means you're going to be making the decisions. You're the guy. You got the mouse on the trigger. You're the gal. And the trouble with being the guy that makes the decision, or the gal that makes the decisions, when you make decisions, you're inviting ego and emotion to be your trading partner. And they're the worst trading partners you can have. So the more you can stick with the same system The more you trade it the same way, the stronger your RAS, the stronger your knowledge of system performance goes. And then once you have that knowledge of system performance and your RAS is there, you can trade robotically. You make sure you have the setup and then trade robotically. Your entry should be robotic. Your exit should be robotic. Notice in there I didn't say, oh, you got to be the great analyst and make decisions on when to enter the trade. You've got to be the great technician or analyst and make decisions about when to exit the trade. Find things, and the Hall's one of them, that will let you do that automatically. Same way every time. And you accept the results. Don't worry about it. If you have 23% erosion one time, great. If you have 38% erosion one time, great. If you got stopped out at 40%, great. If the Hall flips at 17%, great. Doesn't matter. They're all winners. Move on. Move on to the next trade. Use your Hall again. Move on to the next trade. Use your Hall again. It's robotic. That's when you'll be successful. Anyway, fun stuff. All right, so today is Wednesday. That means last session of the week. We'll be back Monday. Hopefully we'll have IML-TV working. I'll talk to Shane, see what happens. Poor guy's being slammed with all sorts of stuff with SOARS coming along and his programming team. I had a nice meeting with them today, and it's just like, oh my gosh, I can't believe the pressure they're under and all the stuff, various stuff they're working on. So we'll see if we can get it working next week. If not, we'll do an impromptu session over here again, but I'd rather it be there so it stays recorded. All right, you guys have a great weekend, and remember, life can be short, so for those people you care and love, let them know you care and love them, just like I love you guys for showing up tonight, and for you regulars who show up every Monday, Wednesday, and most of you Tuesdays too. So it's good. Have a great weekend. Stay safe. And those of you going to SOARS, hopefully I'll see you next Thursday. So we'll have a session Monday. We'll probably have the session Tuesday. There'll be no session Wednesday. I'll already be in the air and down there. Yep, I'll see you there, Cassandra. And anybody else, VIP, there we go. Yep, Matt, looking forward to seeing you, coming down from Canada. It's going to be fun stuff. Theo, see ya. Can't wait, can't wait, can't wait. All right, y'all take care. I'll see you Monday.